Today we are going to talk about 4 things. First, we look at what is algorithmic trading. Then we define our version of algorithmic trading. Then we will look at the expectation of this course. And finally, we will look at our tools, MT5, and demonstrate what MT5 trading robots are and how they work. Essentially, algorithmic trading, aka quantitative trading, aka algo trading, essentially mean we are trading using a trading robot. So this robot, these algorithms or computer programs generate buy and sell signals depending on what kind of rules we give them. And subsequently, the computer program will execute these trades for us. Everything from the signal generation to the trade execution are done automatically without any human intervention. So some people call it automated trading as well. There are 2 main types of algorithmic trading. We have the high frequency type and the low frequency type. For the high frequency type, you may hear a lot of definitions, but the way we define it is that the trading edge, so-called your advantage in the markets, is speed. So, for example, we have gold futures. We have gold futures that are traded in US and gold futures that are traded in Japan. And after accounting for the currency exchange, you realize that the 2 gold futures are traded at different prices, even though they are essentially the same thing. So what you will want to do is to go to the future exchange where gold is cheaper, buy it, and go to the other one where the gold is trading at a higher price and short that. So eventually the gold prices will converge. So once they do that, you will make money because you bought the cheaper one and sold the more expensive one. So after you exit the trade, you make a small profit. So everyone knows about this trade. It is what they call an arbitrage trade. So if everyone knows it and everyone is trying to do it, the one who is doing it the fastest will win. Therefore, high frequency is about speed. You have hedge funds, asset management firms, banks firing thousands of trades per second. And the connection to the stock exchange, to the financial exchange, must be fast. They may earn very little per trade, but because they do so many trades, they make so many trades that even if you make a few cents per trade and you make a few million trades a month, your profit will be in the millions. Alright, so that is high frequency trading. This course is not about high frequency trading. This course is about low frequency trading. In low frequency trading, the edge is in the trading model. So you need to find some kind of market inefficiency that exists, build a model around it, and trade that. You don't have to be the first one there. You don't have to be fast. Therefore, it is called low frequency trading. You don't trade as frequently as you would in the high frequency case. So let's talk about types of algorithmic trading logics. So these are what we call sources of market inefficiencies. You have macroeconomic news, which includes economic data, central bank policies, etc. Fundamentals, company fundamentals. Statistical logic. So we are looking at mean reversion, co-integration, correlation. If this move, that should move, things like that. Market microstructure. Most of you may not have heard of this. Market microstructure refers to how the trading is actually executed. So we are talking about things like level 2 information, order book information, trying to analyze what are the different market participants doing based on how they queue for their orders. And we are also looking at things like arbitrage, as mentioned in the previous slide. And we also have other sources. I mean, technology has grown, so people are using tweets from Twitter to try to get information before the rest of the market, to understand the sentiment of the market. Does the market feel that the central banks are going to hike rates or cut rates? Things like that. We have funds using maps to analyze geographical areas, maybe to identify things related to commodities, oil, agriculture, etc., to try to get information in order to trade it. Primary market research, people sending their guys down to get an idea on future economic growth, for example. We have to be creative with this. And of course, this list is not exhaustive. There are other forms of trading logics. New ones pop up every day, and old ones which do not work die off. Okay, so now we want to define our version of algorithmic trading. So our trading robots are based on low frequency mathematical models using market prudent ideology. So 3 things right now. You have market prudence. This means that our ideas are fundamentally sound from a market and economic point of view. It means it makes sense. It doesn't mean that, we buy because some magic indicator crosses another magic indicator, and hence these 2 arbitrary mathematical formulas is supposed to forecast future price move. No, we don't do that. We understand why we do things because we break things down to first principles, the basic building blocks. Understand how things work, why things work, and we build our strategies based on that foundation. Mathematical models. This means that our strategies are tested using sound statistical methods. We backtest and optimize them based on proper frameworks. We do not fall into the trap of curve fitting and whatnot. Low frequency, as mentioned, our edge is not in our computing speed or the connection to the exchange. Our edge is in our trading models. Let's talk about what to expect for this course. This course is a MQL5 course. We are here to teach you how to effectively develop robots using MQL5. We are not here to teach about robot design. So bear in mind, this is essentially a programming course. We may insert some lectures on robot design. These lectures are from our other courses. So think of those as bonus lectures, because I believe sometimes we need some theory to complement what we are doing. Right, but essentially this course is about programming. If you want to learn about trading robot design, do check out our other courses. So here is an overview of what we will learn in this course. We have 5 main parts, of which the biggest part will be on our coding fundamentals. And we have live execution, how to execute our robots live, some design theory, our platform, and data. As mentioned, we will be using MetaTrader 5 in this course, and the coding language is MQL5. So let's briefly look at MT5 and see what you can do. This is MetaTrader 5. This is an example of a trading robot. We are not going to go into details right now. And right now, I'm going to run a backtest on our trading robot, Robot Anna, from the start of 2015 to the mid of 2016 on the currency Euro US dollar. And there you go, it's running right now. Let's fast forward. We have made $2,600 in 1.5 years from a starting base of $10,000.